Hello friends, welcome to this e-learning session on Essay 299 on Joint Audit of Financial Statements. There are few acronyms used in this particular slides. So FS, FRF, Financial Reporting Framework, AR Audit Report, TCWGV, JAEOM and other matters paragraph. This particular standard is in existence for a long time because India has been having a long history of joint audits. In fact, it's a unique standard as far as India is concerned. Internationally, there is no such standard called joint audit, and it is. I'm very proud to say that the international community also should consider adopting this standard, taking example from India. The scope of this particular standard is, little different from the other standards. In the sense, every other standard expects auditor to perform audit in a particular manner, and it explains the way it should go about that particular subject matter. As far as this standard is concerned, it basically is a principle. It lays down the principles for effective conduct of a joint audit to achieve the overall objective, as if it was done by one single firm. So every auditor would be governed by respective auditing standards for the given areas of audit in the joint audit. However, Essay 299 would only lay down the principles of effective conduct. It deals with the special considerations in conducting the joint audit, but it does not deal with a principal auditor and a component auditor, for which we have Essay 600. This standard is only for such audits where joint audits are stipulated or conducted. So the objective of this particular Essay 299 or a joint audit is it lays down the broad principles of joint audit of conducting, as if we need to understand that what would happen if a single firm is conducting an audit, and this particular standard lays down those principles to ensure that the entity, or for that matter the user of the financial statement, does not feel any difference between a single audit and financial statement or joint audited financial statement. It is therefore necessary that one of the objective is to provide a uniform approach to the joint audit process. It also intends towards identifying distinct areas of work and coverage thereof by each. So this particular standard in the revised form, it lays down a specific principles and responsibilities on the audit and the audit firms for the areas that are allocated to them in the course of joint audit, and therefore ensuring the documentation of allocation becomes not only mandatory but absolute pertinent in case of a joint audit. Like I said earlier, joint audit is an audit of a financial statement of an entity by two or more auditors appointed with the objective of issuing the audit report. Such auditors are described as joint auditors. It is expected that the audit report, they come together to issue a common and a joint audit report, unless there exists a situation of difference of opinion, which we'll be talking about later. Like I said earlier, every standard of audit would be applicable to every joint auditor, and therefore every standard will have to be complied with jointly and depending on the respective area of allocation. So audit planning, risk assessment and allocation of work. If we were to look at involvement of a joint auditor in a planning audit, so it is necessary that all the auditors sit together after appointed jointly and they involve themselves in audit planning and overall audit strategy. So there has to be a consensus discussion among them as to how do we, and please note that all these meetings are necessary to be recorded and minuted. So after that, joint audit plan would be devised. Documentation and communication of risk of material misstatements needs to be communicated to each other. Discussion and documentation of nature, timing, extent, everything that we expect to be ensured during the course of audit needs to be discussed at this stage, communicated to each auditor. We lay down our principles and the objectives and the processes in this particular phase. Just like we would do when we undertake an audit singularly, we sit with our team, we plan, we discuss, and we allocate the work between the team members. Same thing happens in a joint audit, but with the consensus of each other. This ultimately would lead to obtaining a common engagement letter and a common management representation letter. Like I said earlier, signing of work allocation document is mandatory and absolutely pertinent, important and critical. This also needs to be communicated to those charged with the governance. There is an individual responsibility and there is a joint responsibility. In a joint audit, every audit work divided, every audit area allocated to a particular joint auditor. That particular firm would be individually responsible for conducting the audit. So all the audit standards required to be adhered to with regard to conduct of those areas would be adhered to by that respective firm to whom the allocation of job has taken place. However, there are certain areas identified as the joint and common responsibility of the joint auditors. What are those? And it is important for us to know this. Audit work not divided or carried out by all. If management has given you the allocation, you have simply accepted and certain areas remain, the remaining portion would be the joint responsibility of all the auditors. There could be a situation where decisions are taken by all the joint auditors with respect to common audit areas concerning the nature, timing, extent. If we have decided that okay, we will undertake audit only above certain materiality limit, or we have decided that we will undertake only so much percent of the transaction for the audit. So whatever we have decided in the joint audit planning stage about the nature, time, extent of audit procedures, etc., to be performed by each. All auditors would be responsible jointly for the same. Matters brought to the notice of joint auditor by any one of them and on which there is an agreement. There could be a situation where after the audits are conducted and when the meetings take place, a particular joint auditor comes up with his own query and the kind of resolution he has actually undertaken on that. If it is recorded that all the auditors, all the joint auditors have agreed to the matter as resolved by that particular auditor, that particular aspect would be commonly responsible. Either you can decide that whatever you have done we accept, then it would be his responsibility. But if everybody debates, minutes and accepts that particular aspect, it would be a common. Last few things, although in a joint audit there is a possibility that consolidation, disclosure, such aspects are given to as an area to a particular auditor. However, being a public document, examining that financial statements comply with the requirements of the relevant statute. Presentation and disclosure of financial statements is as per the applicable reporting framework, and ensuring that the audit report complies with requirements of relevant statutes, applicable standards of auditing and other relevant pronouncements of ICAI. These are the aspects which are prima facie seen by the outside world, by the users of the financial statements, and therefore it would be necessary that every joint auditor goes through these, suggests the changes if he feels that certain things are missing or needs additional disclosure based on the applicable framework. These are, except for this, all the other aspects would be the individual responsibility of a joint auditor. Coordination. There is a possibility that a joint auditor comes across a matter relevant to the areas of responsibility of the other auditor. During the course of my audit, in the areas allocated to me, I may come across a situation where a particular aspect, this belongs to someone else, or the other leg of that belongs to me, but the larger leg belongs to somebody else, which deserves its attention, and therefore which requires disclosure, require discussion with or application of judgment by the other auditor. So this coordination necessary among the joint auditors. Said joint auditor to communicate it all to joint auditors in writing prior to completion of the audit. Again, it basically is the same principle. What would happen if a single firm first audit, as a particular team is conducting, it would inform the other team that look, I see this particular aspect. If you see certain huge amounts parked in, say, person allocated bank reconciliation as an area, he sees that there are huge amounts not reconciled, kept in the reconciliation for long, and there is a suspicion that it could be a fraud. It needs to be communicated to the person who is actually taking the areas of fraud or taking the aspects of fraud as an allocation. Joint auditor are always on the same footage, and therefore it is necessary and everyone is entitled to assume that the other auditors have done their part of the audit work in accordance with the SA. It is not necessary for a joint auditor to review the other's work. Once allocated, we are entitled to assume that that audit firm will conduct the audit based on the framework provided to us by the institute. So, as a joint auditor, we can assume that the other person has taken the necessary care, the other person has come up with the significant observation relevant to the areas allocated to him. And therefore, once the areas of audits are allocated, this particular standard establishes very clearly that the responsibility would lie with that particular firm and it would not spill over to others. It is also, we are also entitled to assume that the division, branch, area, whatever done by the other auditor comply with the legal and regulatory requirements and present true and fair view. Common audit report. Finally, we need to conclude. A joint auditors are required to issue a common audit report, like I said earlier. It is expected that a joint auditor issues a common audit report. However, there could be a situation where there is a disagreement among the joint auditors. And if it persists, the joint auditor is entitled to issue a separate audit report. In case of a disagreement among the joint auditors with respect to opinion, other matters to be covered in the audit report, or joint auditors need to express their opinion in a separate audit report. A joint auditor is not bound by the views of the majority. He will have his own, like you have courts and three judges can say something and one judge can say something else. Joint auditor is on the equal footage and is not bound by the views of the others. So in case a separate audit report is issued, a separate audit report to make reference under the heading other matters to audit reports issued by the other auditor. So it is necessary, or even just two, both of them have a different view. In which case, in the paragraph of other matters, it is necessary that we make reference to the other audit report. Before finalizing the audit report, it is necessary that joint auditors need to discuss and communicate with each other their respective conclusions that would form part of the content. This, like I said earlier, in case of a planning, this conclusion meeting also is required to be minuted and documented. Because it is in this particular meeting where everybody would come up with his observations, there would be an agreement or a disagreement on particular aspects, and the final process of formulating the audit report would start. So this particular meeting would be necessary for us to document and minutize. If a joint auditor expects to modify opinion or include EOM, other matter para in the audit report, they need to communicate with those charged with the governance. It is necessary that you communicate jointly to the those charged with the governance that these are the deviations that they feel they should be including in the audit report and the proposed wording of the modification. With all this, friends, you will realize that joint audit standard intends towards making an effort to ensure that there is a seamless audit conducted by all the joint auditors together.